Hey everybody, Joe here from Avalon Accounting. In this video, we're going to talk about deducting vehicle expenses in your business. This includes what you can deduct for your company car, as well as how to handle deductions for a personal vehicle that you use in your business. You'll learn what vehicle expenses you can write off and how to stay on the good side of the CRA. So let's get into it. We will get into the good stuff around what you can deduct, but first, I need to cover some important topics that will help you figure out exactly how much you can deduct. I'll start by breaking down the difference between business use and personal use of a vehicle. When you use a vehicle for your business, you can deduct the expenses related to the business portion. However, if you've been using your vehicle for personal reasons, things get a little more complicated. Here are some examples of what counts as business use versus personal use. Business use is driving to a client meeting, picking up supplies for your business, or heading to a job site. Personal use, driving to and from your home, running errands, or using the vehicle on weekends for personal trips. One important thing to note is that the Canada Revenue Agency considers commuting to your office or place of work as personal use, even if you're using a company vehicle. And one more important topic to quickly cover before we get to what you can deduct. I need to explain a bit about the Canada Revenue Agency and its requirements when it comes to documenting vehicle expenses. This means keeping detailed records of costs and the business use of vehicles. Here's what the CRA expects. Receipts. For every business-related vehicle expense, you need to keep receipts. This includes fuel, maintenance, insurance, parking, and any other deductible costs. Be sure to save all the receipts either physically or digitally in case you need to provide proof during an audit. Mileage log. The CRA also requires that you maintain a logbook to track the kilometers you drive for business. Your logbook should include the date of each trip, the destination, the reason for the trip, and the number of kilometers driven for business purposes. This log is crucial for calculating the business use percentage of your vehicle, which determines how much of your expenses you can deduct. To make life easier, there are mileage tracking apps like MileIQ and TripLog that automatically track your trips and categorize them as business or personal. These apps can save you time and ensure that you have an accurate log ready for tax season. By following the CRA's rules and keeping thorough records, you'll be in good shape to claim your deductions and avoid any issues if the CRA asks for supporting documentation. All right, now on to the more interesting stuff. Let's look at what vehicle expenses you can actually deduct for your business. Here are some common expenses that you can claim. Fuel or electricity, costs related to gas or electricity used to operate the vehicle. Insurance, the insurance you pay for the vehicle. Maintenance, repairs, oil changes, and other upkeep. Lease payments, if you're leasing the vehicle, you can deduct part of your monthly lease payments. Depreciation, if the vehicle is owned, you can claim depreciation over time instead of lease payments. More on this later. Finance costs, if you finance the purchase of the vehicle, the interest on the loan can be deducted. As usual, only the business portion of these costs can be claimed. So if you're using the vehicle for both business and personal reasons, you'll need to figure out what percentage of the vehicle's use is for business. For example, let's say you drove 20,000 kilometers in a year and 15,000 of those were for business. You would calculate 15,000 divided by 20,000 or 75% of business use. Now, apply that percentage to your expenses. If you spent $5,000 on fuel, you can deduct 75% of that or $3,750. This way, you're only deducting the expenses that relate to the business use of the vehicle. Next up, let's look at claiming depreciation of your vehicle. When you buy a vehicle for your business, you can't deduct the full cost right away. Instead, you can claim depreciation over time using something called the Capital Cost Allowance, or CCA. This helps spread the deduction over the vehicle's useful life, making it easier to manage from a tax perspective. The CRA has set limits for how much you can deduct. For most vehicles, the cost you can depreciate is capped at $37,000 plus sales tax. If your vehicle costs more than this, you'll only be able to claim CCA on the first $37,000. Here's how CCA on your vehicle works. The vehicle is placed in a CCA class, class 10 or class 10.1 for tax purposes, depending on its cost. You can find more details on these CCA classes linked in the description below. Each year, you can claim 30% of the undepreciated value of the vehicle. This is known as the declining balance method, meaning you can claim less of a deduction each year as the vehicle's value decreases. For zero emissions vehicles, you may be eligible for a larger deduction in the year you purchase the vehicle, which is a big tax incentive for going green. Check the link referring to zero emission class 54 vehicles in the description below to learn more about that. What about if you use a personal vehicle in your business? This is a very common scenario. Business owners often use their personal vehicle for business uses such as deliveries, client visits, or other business travel. In this situation, you can still claim certain expenses, but again, only expenses that relate to business use of the vehicle. Similar to the company car, business owners can deduct fuel or electricity, costs related to gas or electricity used to operate the vehicle, maintenance and repairs, costs for oil changes, tire rotations, and other upkeep needed for business use. Insurance, a portion of your vehicle's insurance premium that relates to business driving. Depreciation, if your personal vehicle is also used for business, you can claim a portion of the depreciation. Interest on vehicle loans. If your vehicle is financed, a portion of the interest can be deducted. Lease payments. If you're leasing your personal vehicle, you can deduct a portion of the lease payments related to its business use. Just like with a company car, you can only deduct the business use portion of these expenses. This is where tracking your kilometers becomes really important. For example, if you drive 10,000 kilometers in total and 4,000 of those were for business use, then 40% of your vehicle expenses can be deducted. And now you might be thinking, what about parking costs? We get this question a lot, so I wanted to quickly cover the topic of parking expenses and when they are deductible. As you probably guessed, parking expenses are deductible when they are incurred for business purposes. This means you can claim the cost of parking when you're attending client meetings, visiting job sites, or other activities directly related to your business operations. However, parking expenses are not deductible when they're for personal use. For example, parking at your office or regular place of business is not considered business use. Parking at your home or when running personal errands is also considered personal use, even if you're using a company car. As always, keep track of your receipts, parking locations, and reasons to ensure that you're properly documenting the business-related parking expenses you want to deduct. All right, let's wrap this up. To maximize your tax deductions for company vehicles, remember these key takeaways. You can deduct vehicle expenses like fuel, insurance, maintenance, and more, but only the business use portion of the vehicle. If you're using personal use vehicle for business, the same rule applies. You can claim a portion of the expenses based on the kilometers driven for business purposes. Keep detailed records, including receipts and a mileage log to meet the CRA's requirements. This will make it much easier to claim your deductions and avoid issues down the road. If you want to make sure you're getting every deduction possible, it's a good idea to consult with an accountant. We can help you navigate the rules and ensure that you're in full compliance with the CRA. And that does it for this video on vehicle deductions in your business. If you found this video helpful, I recommend checking out our other video on what expenses you can deduct in your business. It goes deeper into other types of deductions that can help your business save even more on taxes. And if you haven't noticed, helping educate business owners is a part of our DNA. If you're looking for an accounting partner that will spend the time to make sure you understand the finances of your business so you can reach your business goals, reach out via our website to get started. Thanks for watching, and we'll see you in the next video. Cheers.